Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry I'm a little bit late. I don't know. Sometimes I'm getting ready. I lose focus. Plus there's dealing with a couple of bugs and I found some interesting things about it this morning. So anyways, let's come over to the charts. We got some interesting stuff happening today. Overnight, the Donald Trump tweeting about a Japan trade deal. It looks like the Japanese side has confirmed the deal, and yeah, we're kind of sorting through it. So let's pull up the chart here, and you can see the 10-year Treasuries actually down considerably from where we were yesterday. So yesterday, we got another really strong move up, and I honestly do not see like a really strong explanation for this flow. But I think that the biggest thing that was going on yesterday was over here in the S&P 500. There was another kind of short covering blow up, kind of similar to GameStop. And so a lot of these momentum names that were short, some of these just got absolutely slaughtered. They degrossed, which means that they're losing so much on those shorts that they have to sell other things. They have to sell like parts of their portfolio as a whole. And so this led to some flight to safety movement in the 10-year Treasury. That's the strongest flow that I see, but there might be something more to it. Now here overnight after the Japanese trade deal, the 10-year Treasury moving down. And let's skip ahead. We'll see here, the yen moved considerably off of the trade deal and the dollar is down another 50 cents. That's a pretty big move over there in the dollar. Okay, coming to oil, they've kind of been on the down foot, but nothing too crazy, not any major headlines there. Gold and silver did really well yesterday again. That's just like really looking positive, right? Copper is coming towards the top end of that spike. If they get above 5.9, like, woo, oh boy. It's interesting over there. And Bitcoin's still forming a little bit of a range here, new range. That's good because, in this situation, I think the big risk for Bitcoin in the short term is that the stock market does turn down. So I think it's a little too early for the stock market to turn down. We're in a very seasonally strong time of year. And we've got buybacks opening up and things like that. So, we've got a little bit of time to kind of tread water, but as we get later into the summer, the seasonal flows kind of turn down, right? And that's when you start to get, some of the worst times of the year and times like in, between August and November. Tends to be some of the most bearish times. Like that's when the 2008 crisis happened, right? So the risk over there in Bitcoin is that the S&P 500 does end up turning down and Bitcoin gets sold really, really hard. And there's there's a lot of leverage over there, right? So if Bitcoin took too deep of a tumble, and frankly, the last downturn that we had, they came very, very close, by the way. You get a downturn and somebody gets force liquidated. MicroStrategy, blows up and the whole cryptocurrency ecosystem is just decimated. maybe we can talk more about cryptocurrencies because we had that discussion about it yesterday or like 2 days ago. I had been thinking about it a lot. Offeray at says, loved the intro. Oh, thank you. I made all of the music and editing myself. It's a really good intro. I really like it. So my robot took a short. I tell you what, this signal is so very, very interesting. If you take a short or if you take a trade in line with the order flow imbalance. Oh, actually, I'm what it's doing is exactly the opposite. This was a buy, not a sell. I was going to say, like, normally if you take a trade in line with the imbalance, it tends to go okay for you. But, you know, it might flip shortly afterwards. This one is like the exact opposite. Like, as soon as it spiked there, the flow turned down. So, and that's what I tend to see is like, it's either like you're going to get a spike and then it goes, or you're going to get a spike and that's immediately when it flips. It's pretty rare with this one for it to get over that imbalance and then like do nothing. Unless it was like already moving. So, I don't know. I think we still have a place where I think I can pass in the market order imbalance, the cumulative delta itself, or maybe some. Well, I don't know if there were or the cumulative delta matters necessarily, but. But then other things like how many days there are to expiration, how many days there are to options expiration. Sorry, when I said expiration the first time. How many days to options expiration? How many days to settlement? What day of the week it is? Couple of things like that. And then develop a model that will tell us when to trade this in line with the signal or against the signal. But just know, if we're going to trade against the signal, usually goes in your favor just a little bit, at least. And then it'll flip. So it looks like, though, we got a pretty good move down and they are bouncing. Interesting. Yeah. Okay, so somebody in Discord asked, where should I go to get signals? And somebody was like, subscribe to me for $500 a week. Trust me, bro. Start by asking how. That's funny. Yeah. Okay, let's try and get some details. Oh, can we talk about crypto? Now let's do this first. Okay, so first thing I want to point out is that because we are getting like a short covering kind of zaniness sort of a thing going on again, here are the most shorted stocks. Now, compared to last time, I do not know many of these companies, but the two that stand out to me on this list is Beyond Meat. Oh man, remember when that was the hot stock? Weird times. I never liked that stock, to be honest with you. Beyond Meat is one, and then another one is Groupon. I remember Groupon. Didn't know that they were doing poorly, or that they had a big short interest. I don't know why they have a big short interest, but I think those two on that list, we're gonna see stuff blow up because those probably have the most name recognition. Those might be ones to look for a short covering rally if this continues today. Okay. Oh, that's interesting. Okay, so there was this story where an AI agent kind of went crazy and like deleted the company's entire production database. And it actually, funny enough, that everybody's reading it as like the AI went rogue or malicious or something like that. But I don't think that it was that. I think that it was just the kind of mistake that AI agents tend to make. And the big issue there was actually not having proper separation between environments. So that one's interesting, but it's interesting to me that Zero Hedge has that as their lead, like one of their pinned stories right now. They don't have a pinned story about the trade deal with Japan. Well, what is the trade deal? Oh, nope, this story's not going to tell us. Rates markets downplays Powell speculation that won't die down. If the betting market is onto something, then rates could be in for a notable fall. I'll have to read that in a bit. Woman sees boycott easing for Target. I still refuse to go to Target, to be honest with you. Okay. So, the trade deal will lower tariffs on Japanese imports to just 15% and includes a pledge from Tokyo to invest $550 billion in the U.S. And those are kind of like the top line. I tell you what, when I was like reading about this on Reddit last night, it was really frustrating that nobody was making any comments about the trade deal itself. It was just a bunch of people like screaming at air. Just a bunch of people unhappy, complaining about the way that Donald Trump tweeted about it and all of these sorts of things. So I'm not getting a very good analysis out there, except for like the initial synopsis from the news about what this, what the net impact of this trade deal does. But it seems to me like it is, we have a tariff on Japan, but it's a small tariff. And the thing that we get in return is that we can sell cars in Japan's market, even though I don't know that Japanese people really want to buy American cars, but maybe they don't want to buy American cars because they've always had such a high tariff on them. And, yeah, so we get a 15% tariff on them, and they remove the tariff on our autos, and they invest some money in the U.S., I guess. Oh, yes, and they're also going to buy our rice. That's an important one because Japan was running out of rice somehow. That was an interesting story when we read that. How can I use the footprint to my trading? Is this a real footprint or just an indicator? Please explain. Okay, so what you see on the screen right here is what we call the depth of market. This is showing you current bids and offers out there in the market. These are current offers, people with limit orders to sell. This is current bids, people with limit orders to buy. These two columns in the center are the market orders clashing into those. When you get a footprint chart, the footprint chart essentially shows you the market orders, what you see in those two center columns, but over a period of time. Okay. Now, one of the things with order flow is that order flow is very effective at short-term signals. So a lot of these robots that are scalping and taking trades on the sub-second time period are based on order flow. So order flow signals are very short-term in nature. Whereas a footprint chart, you're typically looking at the volume over a 30-minute period. So that can be useful for you to sort out what potentially happened in an area. Every once in a while, you'll come across something that happened overnight and you look at it and be like, well, it's kind of weird what happened there. And then you find that with that reversal, there was really aggressive absorption before it happened or something like that, right? But generally speaking, what I actually find with footprints is that people are taking order flow and they are attempting to apply technical analysis to it. What do I mean by that? What I mean by that is that people have this conception that people's emotions and psychology is reflected in the market data. And so they're looking at the market data for certain patterns that they think reflect this psychology. And they draw up scenarios about what might be happening based on that psychology and looking for patterns. And so what ends up happening when you're learning about footprint charts is that most of the educators and gurus out there teaching you about footprint charts will teach you quote unquote signals that are completely useless. If you go and you back test them, they don't work. The one that is most prominent in my mind is the idea of an unfinished auction, is what they call it, which is where, like right now, there was 11 contracts at 08 half. And so if they had cleared 08 half and it actually put a bid at 08 half, but then they sold, so there's actually buying and selling at that 08 half, then they consider that an unfinished auction. Because a finished auction would be like the guy that's willing to pay the highest is paid and nobody is willing to sell at that price, and then that's a finished auction. So if it's an unfinished auction, they believe that there is a higher percentage chance that we will move back to that price. And when I back tested that one many years ago, it had no predictive ability whatsoever. As an example. Okay. So, footprint charts are cool. I'll look at them from time to time. But the idea that like you look at a footprint chart and that's going to be the primary basis for your trading, terrible idea. Terrible idea. Absolute nonsense. Doesn't really work like that. Okay. So, DOM, a little bit more useful. How do we use it? Where is it useful? Okay, so first of all, DOM, short-term signals. Very important. Signals are very, very short-term, and you kind of got to read them as like tea leaves. Like, you have a little thing go on, and then you have another one, and they're all kind of painting a picture and an evolution as things go along, and that can kind of give you some idea of what the current state of the market is. The first thing that I'm looking at is, and really you should go and watch my order flow video series. I have like a 6 or 7 video series there that goes into this information really, really in depth. But the first thing that I'm looking at is what is the balance between the best bid and the best offer. Right now they're both pretty high, right? They're almost both at 3,000, which is kind of unusual actually. Usually one is significantly smaller than the other one. But we just ticked up and we've got a relatively strong bid. That is a strong sign. It would be an even stronger sign if that offer pulled away immediately as well. But still, there was some buying there. Something unusual going on there. So right away, right now as we're watching it, we got something kind of going on. Is that like a super effective signal? Like, okay, so I can buy it here and we should continue to go up? Not by itself. But if, for instance, I had some information that said to me, you know what, the way that they moved overnight because of the Japanese yen is actually incorrect and the treasuries are going to move up today. I actually don't think that's the case. I think that we're probably just going to find a place and settle in. But just for the sake of argument, let's say that I did have a bias for the day, that I knew things about the flows that suggested to me that they were going to go up. Then that move that we just had there, where we traded 3,000 to tick up, and then there's a very strong bid behind it, would be a strong signal for me, and that might be enough for me to then get in. Also kind of gives me an idea, like, if I want to buy, can I get a fill at 07? Well, because the bid has been so strong, you're less likely to get the fill there. So you might want to just mark it in at 07 half. And, you know, if you're afraid of missing the move. Right. So these are the sorts of things that we're watching for with the DOM. They're really small things. Sometimes it's just helping you pick which price to put your order in at. But can you provide the link for episode 1? Sure. Or how about I just do this? So you come to Speculator Set Day Trading. You scroll down. There's the Start Here playlist, which is kind of like, you know, getting your computer set up, which software should you use, the biggest mistakes that people make, etc. And you got this order flow video series. Here's the playlist. You can just start there. It's what? 1, 2, 3, 4, 5, 6, 7. Really good video series. Okay, it looks like they did clear the bids there at 07, but they continue to put more up there. So I'm still reading that as relatively bullish. And interestingly enough, because of the way that my robot works, my robot is primarily trying to expose itself to a certain time period. Basically, it wants to be in a position for an hour. And it's only going to take profits or exit if it reaches a certain extreme before that. So it's really interesting to me that it was able to sit through that sell, and it's actually making a little bit now. Maybe that's just luck. Maybe that's just luck. Because we would very much prefer you take the signal and it immediately continues going through. Yeah, it's the 10-year trade is the robot, yes. Up here in the upper left. That chart is primarily there so we can keep track of what our robot is doing. Yes. I get it. It's just confirmation of the rules that you have in your adhere strategy. It gives me one more confirmation that your trade may be working. Exactly. That's exactly it. So basically what I do is I look at all the information that I have for that day. What day of the week is it? What time of the year is it? And what's the seasonality for the year? How far into the the month for the options expiration are we? How far into like the delivery month are we? And then is there a particular news that's going on that might lead to some flows coming through? There are like rebalancing flows that happen throughout the month. What are CTA strategies doing? What are, and I basically I take all of the individual players in the markets and I say, is there something going on right now that might affect what they're going to do today that will cause them to submit orders into the market? And then I combine all of those things together to get like a net imbalance. This is something that I think you could do quantitatively, but we don't really have the way to, like, a really effective way to aggregate all of the data, unfortunately. Maybe if we were a big quant firm, maybe we would. But so we just kind of combined it ourselves into a guesstimate. And then if I'm expecting a large imbalance, that's when I'm looking for a trade. And then, just as you explained, I see what's going on in the DOM, confirming my suspicions. It basically allows me to get into the trade earlier. Because, like, by the time it's really obvious to you that there is, if you're not expecting anything, then by the time it's obvious to you that something is happening, it's usually too late. You got to get in earlier. But what we're doing is we're predicting the edge way ahead of time. It's just that, like, when you predict it, something like that, you know, you can be too early, right? So we're waiting for like the first little bit of confirmation that maybe we're right, and then we can get in there. So I would really describe my strategy more like it's news supplemented with order flow. Because I do not really believe that you can really effectively make money as a retail trader purely from order flow. Like my observation, both from my own performance and from working with a lot of traders over the years, is that if you're doing technical analysis on price, that you're going to lose money. If you use order flow, you will tread water, you'll break even. And if you are using the news and you actually understand it, that's where you get the few people that end up doing really, really well. But it's super crazy hard to do. Now, the key to being able to do that, the key to being able to understand the news correctly, is to understand that what we really care about is what orders are going to get submitted to the markets. So most people, they go and they say, okay, is a trade deal with Japan good or bad for the economy? And if it's good, then they buy. And if it's bad, then they sell. That's the way that most people think about news. But that's not the way that we want to think about it. What we actually want to think about is, okay, there was a trade deal with Japan. What orders are going to be submitted because of that trade deal? Or what orders were submitted because of that news event, right? Well, we saw some movement in the Japanese yen. We saw some movement down in the Treasuries. We saw some movement, I would say some movement up in the S&P 500, right? Those are orders that were submitted. And sometimes you get into these situations where it's like, actually, this is really good for the economy, but they sell because the situation means that the orders will sell, and you'll know it when you think about it from the perspective of what orders are going to be submitted rather than is this just good or bad for the economy. Make sense? Takes a lot of experience. It's like you watch it for a few, pay attention, especially to the economic releases and all of the news. Get a good news squawk. I use Financial Juice. I have a affiliate link in the video description for Financial Juice. And you watch that for a few years, and you watch the order flows that come out. Like at the very least, have like a cumulative delta on your chart, right? See whether the market orders were buy or sell. Okay. And you start to get a really good idea about how the market reacts to those things. Way too many, tiny percentage of people make money trading and not leveraging news for you to be totally right. Too many people that make money. Well, so the issue there is that you're probably more likely to make money just by being stupid lucky. This is the honest truth. So we did a little experiment. So I made a robot that just picks a random number at the beginning of the day. And then based on that number, it will take a trade at a certain time. And then it does another roll to determine whether that trade is going to be long or short. And then it just holds it for a set period of time. Okay. So it's exposing itself to a random 30-minute or 1 hour period of volatility each day. And if you let that run for a year, and then you do that thousands of times, right? Because it's a robot, we've randomized it. So I can run that. I have simulated 1,000 different traders trading, right? So 1,000 different traders, one trade every day, 30 minutes of volatility. By the end of the year, 40% of those traders will be profitable. Believe it or not. So if you think about it, those stats are actually way better than what we see in retail traders. Like the number of retail traders that are actually successful from the stats that we've seen, like after a year, in many cases, it's generally 30%, but in some cases, it's as low as 5%. And randomness suggests that it should be 40%. Crazy, right? So when we see that people are successful, because the issue that we have is somebody's going to post on social media, I was successful with this trade. And then you're going to go, oh, that method must work. The reality is that in order to actually verify that a strategy or a method is actually truly effective, we need a lot more data than that. So if I do that same experiment, but I do it on 5 years of trades instead of 1 year of trades, then the survival rate goes down to like 10% or something like that, which is still higher than what we see amongst retail traders, okay? When you get to retail traders and you look at like who is profitable after 5 years, it might not even be 1%. Seriously. Like retail, if I were to bet number of retail traders, retail futures traders that are only taking intraday trades and are profitable every year over a 5-year period, there might not even be one in this world. There might not even be one, believe it or not. So that's how we kind of get fooled, right? It's called fooled by randomness. So are there consistent retail traders that do exist? Yes. But I think you're going to find that they're doing a couple of things that are a little bit different. So part of the problem is day trading. So if you're not day trading and you're swing trading and you're exposing yourself to a volatility for several days or heck, months or years, then it's a different story. Then there's momentum, and most of the stories that you've actually heard, like all the guys in the Jack Swagger books, the Turtle Traders, all these guys, most of them were actually swing trading. Okay. That's the first one. Another thing is that stocks is a different game. So stocks overall tend to move up. You have like way more opportunities during a day. You have to be fast. And you still use news and all the tools that we're using, but there might be more room for you to be profitable with stocks. Right? So there's a lot of these things in here. But let's see, what are you saying? Tom Hogarth has 5 years. I haven't looked at his, but I don't remember what he's doing. My recollection was that Tom Hogarth is using news, though, right? Like, I could be wrong about that. I also remember recently seeing something about Tom Hogarth, though, that kind of really, really hurt his reputation. I don't remember what it was. He uses an opening range. I've backed it. So where I was really getting at was this. Trust data, not people. Right? Can you come in and say, okay, here's this strategy. This is what we're doing. We actually systematize it. We write code up for it. And then we show how that strategy performs over the past 10 years. Right? Like if there is actually an inefficiency in the market that we're taking advantage of, especially when we're talking about technicals, especially when we're talking about technicals, shouldn't we be able to show with the data that that's actually what's happening, right? So why do we do news? That's a good question, actually. Okay, so first of all, if you watch my order flow video series, the information that I'm covering in that video series is one, understanding the data that you're looking at, two, giving you a little bit of color of experience, like the sorts of things that you tend to see happen and how I personally, at least, will deal with some of them. And three, empirical evidence about how order flow actually behaves. So some of the most, like, is the market a random walk? Well, it turns out there is some things in the market data that is different from perfectly random. And there are a lot more oddities like that in order flow than there are in price. Price mostly just looks random. But when you look at order flow, you start to find really interesting things. And so there's a very, very well-backed empirical information about the stylized behavior of order flow. That's what you learn in that video series. Okay. So what do we learn from all of this? There's kind of a higher level takeaway from the data that we get that I'm teaching you in the order flow video series, and it is this: the market is more statistically efficient than it is informationally efficient. So if I come in and I take a trade, and I trade like 1 million contracts, it's going to move it, right? It's going to move it. You're big enough. So kind of what happens is, if there is some sort of a statistical inefficiency there, something that I can see from a chart, I'm going to trade it. And especially if I share it with other people, people are going to size up until that aberration doesn't exist anymore. And it actually kind of turns out that our individual orders are actually way more powerful than we realize. And so it's actually very, very easy to wipe those inefficiencies out of the market. And the end result is you get a market that is almost indistinguishable from a random walk. So the markets are very, very statistically efficient because of the strong impact of orders. But the strong impact of orders also means if I'm coming in and I have to buy 1 million contracts, and I'm buying 1 million contracts not because I think that the trade deal with Japan means that the treasury yield should be lower because the economy is going to be stronger, and instead I am buying because I have to rebalance for the month, I'm still going to move it. Hence, we have a situation where the market moves even though there was no informational content behind that order flow. So these people that believe in technical analysis, right, they're going to look at that move up and they're going to say, oh, this reflects that the fears were overblown and those, the sentiment shift, and they have this story about what it means about people's psychology and things like that. When the reality was, it was completely random based on what this guy needed to do to rebalance his portfolio. So the current price is not going to reflect all available information. It's going to reflect the orders that were placed into it. Hence, markets are not informationally efficient. Current price does not reflect all available information. Now, this is difficult. This actually kind of makes things harder, right? Because it's like, okay, from a statistical perspective, really, really hard to find an edge there. Maybe not worth it. You can find edges there, but it's just understand. Super, super hard, especially as a retail trader, right? Okay, so then I'm going to go for the informational inefficiency. Well, the problem there is, if they're not pricing it in now, what makes you think that after you take the trade that they're going to price it in? So you really have to look for a situation where something that the market is not reflecting, and that you're going to get flows coming in like right away, right? Like, I know that this thing is going to happen or is likely to happen. I'm getting in the trade, and then the headline actually hits the news squawks and it moves, right? And we do that often, where I'm able to kind of guess that a headline is going to happen. And that's what we're trying to do, right? Now, that's still crazy hard. And I'm not aware of a retail day trader scalping futures that is profitable over a 5-year time period. And I am not. I've had some good runs, but I am not profitable over a 5-year time period. I've had periods of success that definitely match like what most people on Reddit and YouTube are promoting as I'm a profitable trader and you should follow me and I know everything now, sort of a thing. Not 5-year history. Crazy hard. Part of the issue is you have to understand the market. You'll come into a market that you don't understand and then you're going to lose money, right? There's the issue there. So how much edge you have changes every day. It's hard. So why do we do it? Well, for one thing, I really enjoy it. But really, I think that the main reason why I continue to do this is because being on the front line and being involved is the best way for us to learn and for me to teach about these other things, the kind of the bigger picture things that I think are really important to teach society. How we arrive at all of that information. The fact that the market is statistically efficient and not informationally efficient, that really significantly conflicts with the mainstream understanding of the stock market, doesn't it? And we are making a lot of decisions about companies, about society, based on a narrative that is completely, utterly, empirically proven false. If we want to move to a better world, the world's going to need to understand that. You can't just make all your decisions based on what you think the stock market is going to react to it. Right? And the way that we discover all of these things is kind of what happens is all of these individual little things, like we were talking about, is there more on the offer than on the bid? And what kind of happens is that as these small interactions play out over thousands and millions of interactions, you tend to get emergent behavior that comes out of it. This is called complexity. In complex systems, emergent behavior that you wouldn't expect from the individual interactions tend to emerge and tend to dominate the results of that complex system. So if we really want to understand the world and move towards better systems, we're going to have to understand complexity, essentially. And so it really just becomes an effective way to teach people about it, complexity, the inefficient nature of markets, and to just keep track of the news and be informed about what's going on in the world. So I'm not on here saying, yes, you should absolutely trade the way that Seth trades, then you will be a millionaire, yada, 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 yada. I think that anybody that's out there that's telling you that is full of shit. The narrative is comforting, but empiricism is the truth. Yeah. And I mean, that's the other big thing is it really bothers me that the whole of retail trading is based on a bunch of kind of folklore ideas about the way that the market works that is not just not empirically backed, but often directly contradicts the empirical data. The whole the popular thing these days is smart money concepts. Although it's I tell you what, man, it's interesting to watch the industry shift on it. There's so many people now leaving smart money concepts and moving over into order flow. It's because the empirical data directly contradicts what smart money concepts is saying. Now, it would be nice if people were moving into a empirical understanding of order flow, but unfortunately what most people are getting is order flow mingled with technical analysis. Doesn't really help them. But SMC was a nice story. I think it's a narrative that's really effective at attracting people and manipulating them, right? It's the old you're making lures to attract fishermen rather than fish, right? You ever heard about this? Like if you go to the fishing store and you can go and buy fishing lures, and there are some lures that they make that are really there to look cool for the fishermen because the fishermen will think that they look fancy and buy them, even though they aren't very effective at catching fish. That's what SMC is, yeah. I guess the thing is that I'm not saying that you can't have success with retail trading. Absolutely not saying that. And in fact, you know, I think part of another thing that we're doing here is that if you sit and you watch order flow on the 10-year Treasury, man, you're going to understand markets in a way that other retail traders don't, that even many institutional traders don't. It's a huge advantage. And so when you move over into other things, that advantage is still there because you kind of understand what's going on the most basic level. So for instance, if I were to look at my overall futures trading, like it's I think you're probably a small loss at this point because there's still some losses from like way earlier in the career. So the better performance has only been the past 4 years. But well, not even the past 4 years, past 3 years, I would say. But my house, for instance, that's kind of a trade. That's something that I wouldn't have known about without my understanding of markets and knowing what I knew about the treasury market and interest rates and things like that. And that's worth hundreds of thousands, right? That dwarfs any of the little mistakes that I make, you know, with futures trading. I think that when the pattern day trader rule changes in a year, that we might trade stocks and maybe we'll have more success with stocks, you know? So I'm not saying that people can't be successful with day trading, but I am saying the amount of edge that you can have as a retail trader is limited. You're very, very unlikely to become a millionaire from day trading. I've been seeing talks of the pattern day trader change picking up really fast. You know, I still haven't seen a lot of discussion about it, but it's coming. You heard it here first, folks. They're going to change it from 25,000 to 2,000. And then I don't think we'll see as many people trading futures. I do wonder if this shifts the likelihood of retail traders wanting to do funded trader programs. You might turn into a world where like only the foreign traders want to do the funded trader programs, but we'll see. Anyways, he asked me a question. What do you think of a delta divergence? Delta divergence is a signal to not trade. So when you get a situation where price moves one direction and cumulative delta moves in another direction, that is saying that the market orders are not very indicative of where price is going at that time. That's not good market state for you to trade in. And so you don't take a trade there. There's this idea that like they need to come back into agreement with each other. And you know what? Most of the time they do. But the problem is that you don't know if the price is going to come back or if the cumulative delta is going to come back. And so you right? There's still like a question mark there. So my solution to dealing with this is don't trade divergences. I want to look for correlation between cumulative delta and price is high. and that cumulative delta is relatively autocorrelated. That says to me that we're getting a flow that's persistent that's going to continue pushing us up. What are all of these charts? I only have 2 charts. This chart in the upper left is the 10-year Treasury, and it has a robot that's taking a day trade. It's getting close to when the robot should be exiting. So it's got about 5 minutes left, so it looks like it's going to end up taking a loss on that one, unfortunately. There was a point at which it was going okay, though, right? And then I have the dollar index right here. So this is one of my indicators. If you go to speculatorseth.com, I have a suite for NinjaTrader 8. And one of the most useful things in there is the synthetic dollar index, because to get like real dollar index data, you have to subscribe to ICE, and it's like $100 a month, and nobody does it, right? What I do is I look at the FX futures on on the CME. The CME has Forex futures, and I use those to calculate what the dollar index is. Dollar index is a well-known formula and everything. There's a lot of weird quirks with having that many data series. So, I don't know. You might be able to program it yourself, but you might find that it doesn't work as well. Or is not as crashes. But anyways, synthetic dollar. So that's why I have that up there. That's something really important that we use. And then the rest of these are DOMs, different instruments. 5-year, 30-year. Well, I have up on there, the name of them. ES, ZV, ZN, ZF. And the ones on the bottom are just the micro treasury yield future. I think it's in the discovery rules making process, though. If the SEC is floating it, it's probably, yeah. Like, enough people wanted it that pattern day trader rule change is going to happen. Man, people are... Yesterday, I was doing an investigation into an issue, and so now people are waking up and looking at it again, and my pocket is just vibrating out the wazoo. Oh, okay, they fixed it. No.
Order canceled.
Okay, so there was the robot exiting. It's a timed exit. Oh, wow. Oh. Interesting. Okay, where were we? Pattern day trader rule. Yeah, I don't know, guys. The pattern part of me, I think, feels a little bit anxious about the pattern day trader rule because, well, so much of what we have built has been on futures trading, and we were kind of anticipating that futures trading was going to become more available to people. Like they're still, I think they're still putting it into Robinhood and stuff like that, right? But if the pattern day trader rule is brought down to 2000, then I think a lot less people are going to do futures. And I mean, that's okay. We can continue to do our thing. But part of what we're doing here, as described earlier, is to help teach people about the market and complexity. And so that means that we're going to have to change and adapt. And changing is always a little uncomfortable, isn't it? I think that we're going to have to do some stock trading to stay relevant. I might focus a little bit more on swings, but and that some of our process is going to have to change, because I'm going to have to be coming in here every day and looking like, using scanners and things like that to identify which stocks we want to pay attention to that day. That's like the big change in our process that we're going to have to make. And when a bunch of people lose a lot of money in stocks, we'll be like, come join us on the light side of futures, leave the dark side of stocks. Like, it is, like, that's the thing, Apol, is like what usually happens is we're in a bull market, and then the day traders trading equities all think that they're doing well. And then the bear market comes and they get absolutely decimated. Whereas with the futures traders, when the volatility comes, well, a lot of futures traders get shaken out. But there's always a small handful that just do absolutely amazing during that period. Smile, your teeth look great. Oh, thank you. I've been, recently had them cleaned. I live in a social country. This is the last thing we need. What? The lower pattern day trader rule? I don't know. What is considered a socialist country now? Does that mean you live in Canada? Oh, the UK. That's not a socialist country. Come on. I mean, so here's the thing: is I think that especially us in the United States we're always joking about, you know, this country did this country did this, and that makes them socialists now. I think it was always kind of a joke, but by joking about it, we maybe kind of morphed people's perceptions and definitions of socialist. You know, I don't believe that having a social healthcare system makes a country socialist. Now, having social services does not necessarily make a country socialist. Like, what makes a country socialist is saying all mining operations in the country have to be owned by the state. That's socialism. And you know, some countries are kind of doing that with healthcare. But that one's kind of like a border issue where we kind of say, well, because of the unique properties of healthcare, maybe it's okay for the government to do that with healthcare. You know? What's the trading package that you're using right now? So I use Jigsaw Day Trader for the depth of markets. And by the way, when you buy that, there's like different packages, but you just get the base one. The other packages are like education packages. You can buy those later if you really feel like you need them. You've tried it, it doesn't make sense. You can try those education packages. And then I'm using Ninja Trader 8 for the charts. And I have a Ninja Trader 8 suite at speculatorseth.com that you can download and try for free. There is a free suite that's just like completely free for always. And then there's my indicator package. So most of this stuff that you're seeing over here, like these two things and synthetic dollar index, those are parts of my indicator package. Anyways, I'm leaving. You love Alaska. Why would you move to Alaska? I'm told that there's lots of people there like, I would like to live in Alaska, and then they go there and they absolutely hate it, and that it's just like really takes a really special type of person to live in Alaska. Oh, and the broker, I am using EdgeClear for my broker. EdgeClear and Rhythmic Data. Moved to Texas. You know what though? But by the way, have you been here before? Like, today is the first time I seen you speaking recently, but I do kind of vaguely remember somebody from like way long time ago with that name. Too cold, too wet, too dark in the winter. Yeah. But I am a little bit concerned that what is going to start happening in the UK is everybody leaves the UK and comes here. Is that not likely to happen? Because there's the immigration thing on one side. Like, if you're really unhappy with the culture of your country changing because of the immigration, you might move because of that. But then on top of that, Brexit has just really harmed their economy. So, and if people are leaving, that really makes it hard for them to ever recover economically. And then people are always going to point back to leaving the EU as the thing that killed the UK. Only the good ones are leaving. Yeah. I'm not worried. I'm not saying I'm worried that they're going to come here. I'm worried that, like, how can the UK be a successful state in the future if all of its best people are leaving it? It's not Brexit. It's the failure to embrace the advantages it gave us. That is an interesting perspective, Humphrey. I would love to hear. You should write like an essay about that, and I'll read it, or like have ChatGPT write an essay about that, because You know, so there was this argument going on TikTok the other day, and this guy was saying like, is it better to tax like is the Laffer curve actually a thing? He was basically arguing that the Laffer curve wasn't true, and he was like, oh, we can do it with data, and so he kind of did this thing where it was like looked at the effective tax rate over time and how much what we were like making and whatnot, and he said, hey, see, look, like they're not correlated. Absolutely terrible data analysis. I was a little bit scared that it was like, okay, well, like he knows how to use the Python tools, but he knows absolutely nothing about the economics behind it and why like the measures that he's using are wrong and that he doesn't have data. And there was just a lot of problems with this analysis. Because the thing is the Laffer curve is without question a real proven phenomenon. Is just the question is like, where is the point, right? It turns out that if you tax more than 40% of GDP, that's where the Laffer curve starts to really be noticeable. Okay. But it actually turns out that what you tax and what you're doing with those taxes matters considerably more than the absolute percentage level of the tax. This is complexity at work. And so it would not, I would expect that Brexit would probably be a similar thing. That whether they are part of the EU or not part of the EU probably doesn't matter as much as the specifics of how the relationship works when they're in the EU and the specifics of what they do when they're out of the EU. And I have seen a couple of things where it's true that with Brexit, they, you know, it was kind of like half-hearted thing. It was like they left and then the liberals were like determined to make sure that we suffer for it, you know? And I suppose that's relevant because how is it going to work with tariffs, right? I think that like the details of the trade deals that you get and all of those sorts of things might matter more than the absolute level of the tariff, as long as the tariff is a relatively small amount, you know, like 10 to 15%. Okay, that's cool. We have 10 to 15%. But then we get trade deals. Maybe that ends up being more economically advantageous than before. Because I think that the history before was like tariffs are just explicitly bad no matter what. And I think that would largely, we reached that conclusion because of the Smoot-Hawley tariff. But I actually think the Smoot-Hawley tariff kind of got a bit of a bad rap. Like, yeah, tariff is, I'm not saying that tariffs are good per se, but they didn't actually cause the Great Depression. They just kind of happened at around the same time. And so we over extrapolated the negative impact that tariffs have. Now I'm hoping that what we come back to is, okay, well, tariffs are not a good thing, but they are a tool that's helpful in certain situations. I want another EU for sovereignty reasons. I don't want another tariff government. Yeah, well, I tell you what, man, since they've left, it's not like the EU got any better, is it? Like, some of the things that they're doing over there in the EU are crazy. Like, just really dumb stuff. Like, what are they thinking over there? Like, especially the stuff with farms. And the whole thing that's happened in the Netherlands, both from the Netherlands government itself and because of the EU with farmers is bonkers. It's like, you want people to starve? What the heck are they doing over there, man? Just net zero, yeah. Well, because the truth is, regardless of whether or not you believe that global warming is man-made, well, regardless of whether or not you believe that global warming is happening and whether or not it is caused by mankind, the climate change movement as a whole is a hoax. And why I say that is because they're like, okay, we're putting all of this carbon into the atmosphere, and then they make it into like, so you shouldn't have plastic straws. and you're just doing all of these virtue signaling things to essentially rich, well-to-do people, giving them things to make them feel like they're making a difference for climate change when it really doesn't make a dent in it. Because all the carbon is coming from China. Almost doesn't matter what we do. We're one of the best countries. The United States is one of the best countries in that respect, right? It's all BS, yeah. And then you're going to like completely decimate your food supply. It's just crazy. This is just crazy. And it's based on like what is essentially a death cult. Right? Now if we're to say we do believe in global warming and we do believe that it's man-made and that we should do something about it, okay, then we can talk about solutions, but they're not going to be the solutions that people are proposing. I tell you that. My expertise is not global warming. My expertise is finance and the economy. And I'm just telling you, okay, I'm consulting you so that we're going to say, for the purpose of the consulting, that global warming is happening and it's man-made and we need to do something about it. Okay, how do we tackle it? The solutions that the left is proposing are the worst things that you could do. You're just going to make everybody miserable and reduce the overall population and make it harder for you to develop the technologies that you need to actually solve the problem. What we need to do is we need to just continue to invest in energy, nuclear energy, wind, and all of the above. And if we continue to invest in those things at a good pace, and especially if we invest in nuclear to the same degree that we do these other technologies, because nuclear hasn't moved in decades because of all of the regulations and bullcrap, right? Then we would solve the problem. The pace of the technological development is such that we would solve the problem. Food production doesn't matter if you can import food. Just read that line without adding more information. I fully believe that reflects what many politicians think. Yeah, and then they can do it in a way that produces even more carbon than the way that you're doing it in your country, and you're dependent on them. And yeah, it's just so dumb. Just so dumb. Thank you for stopping by. We had a good conversation. It was almost time for me to get going anyways, too. In fact, maybe I should just stop things early because 500 million, Gun Driver says. That's, are you talking about the Japan trade? No, that was 500 billion. It's crazy how many great geniuses believe that green plants cause global warming. So there was this really interesting thing I saw where they were saying, we know that most oxygen comes from the ocean. And we always believed that it was because there's plankton. And the amount of plankton in the ocean far outweighs the amount of oxygen that's created by forests and stuff, which is explicitly true. Like if you want to, there's this whole thing like you put the plant in your room and it should produce more oxygen for you and be beneficial. But it actually turns out that the amount of oxygen the plant makes is trivial. And so if you really want to make a dent in it, you use algae. But they have also discovered that there are like these nodes on the ocean floor that are essentially producing electric current and cause the water to separate into hydrogen and oxygen, and that is producing a lot of oxygen too. Very interesting. But again, I'm not an expert on climate, so I don't know, like, there's this whole argument about like that the data says that we are warming, and that then there's these guys that'll come out and say that it's not. And I've read the articles, but I've never had an in-depth enough understanding of it all for me to be like, I am very confident in my empirical understanding of this issue that I can prove that it is or it isn't, right? You gotta stay in your lane. That's me. That's the one issue that more than anything, whenever it comes up, I'm like, you got to stay in your lane. It's not my place to say whether global warming is or isn't happening, because I'm not an expert in that place. But it is my place to say, if we think it is or it isn't happening, what are some of the economic policies we can put in place to achieve certain goals? And the policies that I see being put in place are in many respects objectively harmful to achieving those goals. It's impossible to be an expert in an infinitely complex subject. Well, when you use the term complexity, I always think about what are the top higher level emergent behaviors. Anyways, it's time for me to get going, guys. I should end because I want to get in and get back to fixing this issue. So I will see you guys tomorrow. In the meantime, stay excellent, team.